What's going on, traders? We got a few things to talk about, but before we start, like, subscribe, comment your thoughts below. Let's get into the video. So, today was pretty interesting, or more so frustrating for a lot of bulls, I imagine. We pretty much ran up or had a mini rally, and then we pretty much gave it all back. And me personally, I've let it be known in the Discord that I did not enjoy this rally or this small rally that we saw in the first 30 minutes of the market. It was just too fast, and it was happening way too quick, and it was like in the first 30 minutes on a Monday. Nothing about it looked good, and it's turned out that my gut feeling was right. We pretty much gave back majority of our gains today. So something to keep in mind. I told you guys in the last video that bears are back in the market, and so the market is in a very, very sensitive state, very, very fragile position. And I imagine any bad news that we do get, the Bears are going to react to it. We could pretty much call it the revenge of the Bears, for lack of better wording, because for the past 6 months, Bears were pretty much non-existent in the market, and if they were, they continuously got bear trapped. And now I think this is the opportunity, or any opportunity they see, as far as bad news, whatever the case may be, they're going to take advantage of it, and we're seeing that happen now. So we're being reminded of what the market looks like when Bears are in it, and right now, I think, well, not right now, but I think a lot of traders got too comfortable with the rally, and you're still seeing it now. They're just like bull, 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 and they're expecting the market to continue to just go straight up from here. And right now, I don't think that's the case. And now, I'm not saying we're not going to go up. What I'm saying is that you're going to see a lot of volatility because bears are back in the market, and I think that's very safe to assume. Now, looking at the triple Qs here. So, as far as the triple Qs go, the triple Qs, like I said in the last video, do look better than the SPY. It doesn't look great, but it doesn't look bad either. Now, there is a potential there is potential for a move back towards this gap fill at around 458, 457 range, and then we'll have to see what happens from there. But for now, I told you guys about this turbulence here on the triple Qs. We're looking at the 4-hour time frame, by the way. I told you guys about this turbulence above this daily supply and demand zone right here, and that's exactly what we're doing here as well. We're just creating a lot of turbulence here, and I'm assuming it's up to earnings, the earnings report, or whatever news we get this week. I know we have news Wednesday, and we do have news tomorrow as well. But I imagine those things are going to determine what direction the market is going to go. Now, tomorrow afternoon or at close, we have AMD and Microsoft earnings. I think AMD is going to be pretty important because it's going to set the tone for what we are going to expect from semiconductors. I think Microsoft is just as important as well. But Thursday is the really big day. Thursday, we have Amazon, we have Apple, we have Intel, we have Coinbase. I imagine if we do get two bad semiconductor earnings, I think the market is going to react very badly to that, as well as Apple earnings, of course. But the market has been really moving off semiconductors. We saw that last earnings season, so I imagine the same reaction is going to occur if we get bad earnings. Now, if we get good earnings for these semiconductors and they react well to it, keyword is react well, then we could get a rally back to previous highs. Okay, so looking at the triple Qs, your key levels still remain the same. You're looking at 455, I would say. 457 is a key level, but we broke below that. But if we break below 455, then chances are we're going to head much lower and we can head towards 450. As far as upside goes, you want to see a break above 468, and then we're easily going to start heading towards that 474 target, which is where our original gap fill was. Let's look at the daily time frame. Yeah, right here. So you're looking at a move towards 474. I told you guys gaps have very strong resistance, so I don't think we're going to immediately break here. I think 474 will probably reject, maybe retest 468, and then we'll see where the market goes from here. From there, looking at the SPY looks the same, guys. I'm not gonna lie. It still looks like it's between a rock and a hard place. It's still below or somewhat below this daily supply and demand zone. It's actually in it, but let's get a closer look. Actually, yeah, it's somewhat in it, somewhat out. So we'll see. But for now, again, the SPY just still looks like it's in a weird spot. Now we can consider this somewhat of a head and shoulders pattern. It's just no clear neckline right now. But if you want to consider it, I don't actually blame you. You have a possible shoulder here. You might have a shoulder forming here, and then you have your head here as well. So that is a possibility. I don't think the market is going to, for lack of better wording, I guess, crash during big tech earnings season. I don't think the market's going to crash at all. But regardless, um, I guess correction would be the right word here. I don't think it's going to happen during big tech earnings, and if it does, I mean, I guess that kind of makes sense because it's big tech earnings. What I will say is that heading into tomorrow, not tomorrow, but I care more so about Wednesday. Now, Wednesday, we have some major news coming in. We have non-farm payrolls on Wednesday. We have employment cost index, Chicago PMI, and then we have FOMC press conference and FOMC statement. What I will say is that this is my personal belief. I say it all the time. I don't think the market cares about this type of stuff. I think the market cares about earnings and earnings only. That's just my opinion. If you don't believe me, I mean, look at what we saw last earnings season. Okay. Any news we got outside of Nvidia or semiconductors or AI, the market didn't care. It just kept going up. And I've always believed this. I always believe any news outside of earnings is pretty much I wouldn't say completely irrelevant, but more so irrelevant in comparison to earnings. Okay, why? Because these companies such as Apple, Microsoft, Amazon, they pretty much keep this country running. And by this country, I mean the US, if you stay in the US, okay? It keeps the country running, and that's all this country cares about. That's all the money, okay? The money. As long as the money is good, that's what's going to keep this country running. That's my personal belief. Do what you want with that information. So I have reason to believe that the same thing is going to occur. If we have bad earnings, the market is going to react bad, and everything else, as far as news articles, Fed rates, things like that, are just going to add to the downside on top of the bad earnings. That's it. Um, and that's my thought process. But as far as the SPY goes, the same thing occurs here. You're looking at 537. You break below 537, you're looking at a move towards 531, 532 range. As far as upside goes, I told you guys before, you want to see a move above at least 550. You can say 548, but me personally, I like 550. That psych level, we get outside of this daily supply and demand zone, then we're heading towards this gap fill at around 554. Me personally, I told you guys, I want to see a move above 556. If we get above 556, then we're easily heading towards previous highs. I didn't like the move that I saw this morning because, believe it or not, guys, we're not far from previous highs. Like, we're not. So for that move this morning to happen that fast within the first 30 minutes of open, it was just way too fast, and we're not far from previous highs. So if we were going to make continue that move, I would definitely be bearish for the rest of the week. If we just kept going and kept going all the way up to at least 556, then I'll be like, all right, we might like drop hard the rest of this week. But we gave it all back, so nothing to panic about right now. But let's look at some stocks, and I'm going to show you guys what I'm looking at because the market looks really sketchy right now. Okay, let's look at Netflix. So Netflix looks like it wants to drop. A lot of stocks look like they want to drop. Okay, I'm just gonna put it that simple. All right, there's no sugarcoating this. You guys see it here. If you guys don't trust my channels, you don't believe in my channels by now, I mean, I'm showing you these channels work. Look at Netflix. So we rejected here, we rejected all in this area here, we somewhat rejected or we attempted to go higher here, we bounced here, we bounced in this area here, and I'm only showing you guys this if you're new to the channel so you know I don't try to make this stuff up, I don't try to force anything, I show you guys these channels and these trends because they work, all right? And right now we broke below this channel, and I have reason to believe that Netflix is going to head lower. I think Netflix is going to head towards 610. And then after that, you're looking at a move to 600. The lowest I'm looking at is the supply and demand zone down here at around 580 on Netflix. Let's look at Meta. Now, Meta does have earnings. I believe it's Wednesday, yeah. So Wednesday after hours, Meta has earnings. ARM also has earnings as well, so that's something to pay attention to. So again, semiconductors it's gonna be a crazy week for semiconductors. All right, but Meta, I mean, same thing. It just doesn't look good. It's not in a good spot. And again, I can show you guys. We bounced here, we bounced here, we bounced here, and then we broke below. We actually gapped below this daily supply and demand zone, guys. Daily supply and demand zone. Look how often we rejected it and how often we bounced off this daily supply and demand zone. Now we're below it. And now we're retesting it. Okay, we're retesting it. It just doesn't look good. It doesn't look good at all. And right now, if Meta has bad earnings, and earnings can easily turn this around, it can. But if Meta does have bad earnings, this thing can head all the way down to 400. Okay, it can. Again, earnings is gambling, is 50-50, but nothing about Meta looks bullish right now. It just doesn't. Okay. Let's look at Microsoft. Microsoft has earnings tomorrow after hours. Microsoft looks, it's not in a great position. It broke back in, this is a monthly supply and demand zone again. Okay. I said this in the last video. Monthly supply and demand zone, guys. Look where Microsoft is. It broke back into this monthly supply and demand zone. It's within this rising channel right here as well. I mean, I'm not making this stuff up. Bounced here, bounced here. It's trying to bounce here, but it's still stuck in this monthly supply and demand zone. We go to the 4 hour time frame. I don't even know how this happened here, but on the 4 hour time frame, it looks like it's breaking below this channel and it simply retested and rejected the top of this monthly supply and demand zone. Something to keep in mind here. Now, if Meta continues down, it can continues lower, it can head towards that 400 level, okay, which is at the bottom of this monthly supply and demand zone, 398, 400 range, okay? So, I mean, a lot of stocks look bearish right now. They really do. Despite what the triple Qs is showing, despite what the SPY is showing, and the SPY isn't really even showing much, everything else looks pretty scary, okay? Um, Apple. Now, Apple doesn't there's not much to Apple's not giving me much here. Okay, now it's right now it's just hugging this trend. It's hugging this daily supply and demand zone. It's just consolidating here. So I imagine it is waiting on earnings. Let's go to the daily time frame here. I mean, maybe it's forming a inverse. I mean, not an inverse, a head and shoulders pattern here. Maybe you got your shoulder here. You got somewhat of a shoulder here. Maybe this trend is a neckline, and it's just speculation right now. Apple just isn't giving me much, so I wouldn't say it's bullish. I wouldn't say it's bearish. It's just more so in neutral territory. So, Tesla. Tesla looks like crap. Okay. It looks like it's attempting to fill this gap fill. I told you guys at 230 range that Tesla is a good opportunity to get puts. Have I done it? No, but it is something to watch. Okay. I would just consider watching it. All right. Because this market is in a weird spot once again. You're looking at the daily time frame here. I mean, it looks like it's attempting to fill this gap. It can maybe revisit 250, but Tesla has a lot of space down here. It bounced off this original gap resistance at around 214, 215. It has yet to fill this gap all the way at 212.5, and it still has room to more to the downside. Okay. And I told you guys my price target on Tesla as far as downside goes is about 207, 205 range. So something to keep in mind as well. There was another stock, AMD. And and keep in mind, some of these do have earnings this week, and that can change things. Okay, I do believe that TA can predict earnings. That's just my personal belief. But even AMD, I mean, look where it is. You bounced here, you bounced here, you bounced, and look at all this space. And it looks like it wants to head back towards this trend at around 123, 120 range. Something to keep in mind here. AMD has earnings tomorrow. So a lot of things just don't look convincing, and this is why I'm avoiding trading much. Okay, it just doesn't look convincing. The Qs look somewhat bullish, but it doesn't look convincing. It looks like the market is like waiting. It looks like it's very indecisive right now. And yes, we're at the bottom of this channel. Yes, we're above this daily supply and demand zone. But all the big tech, a lot of big tech stocks, even the semis, they don't look strong. Now you have some semis that actually do look good, and you have some that look bad. You have some tech that look good. You have some that look bad. It's just a very wish-washy market. My point here, guys, is just to be very cautious heading into the rest of this week. There's a lot of news this week, a lot of volatility this week. Me personally, I think it's a day traders market. I think it's a scalpers market right now. I don't think this is a swing traders friendly market unless you're like really going like really dated contracts or leap contracts. It's just a very scary market. All right. So be careful out there. Um, Take profit when you can if you are day trading or scalping. Me personally, I don't scalp. And that's all I have for this video. Hopefully, you guys got something out of it. Hopefully, you guys got some value out of it. I know you wanted me to go over the NASDAQ. There's just the NASDAQ is pretty much showing the same thing as triple Qs, guys. I mean, ES, same thing. Same thing, guys. Same thing as a SPY. So, not much to go over there. So until the next video, traders, you have a good one.